Good evening, future Maryland homebuyers, and thank you so much for being here. My name is Jackie Muick, Advocacy and Communications Administrator for Maryland Realtors. I want to welcome you to your Home Buying Keys webinar. Assembled tonight, we have experts in the industry. With us, we have Christina Garcia, a realtor with Sampson Properties, Carly Steiner, a lender from First Home Mortgage, James Hall from Freddie Mac, and Kathleen Kramer Dale and Frank Bamunde from Maryland Department of Housing and Community Development, also known as DHCD. Tonight, you will get an abundance of information to help you navigate and succeed in your home buying journey. This webinar will be recorded and sent out to all attendees in the next 2 business days. We encourage your questions and we're looking forward to answering them. Please post all questions in the Q&A box below at the bottom of your Zoom screen. And with that, I'll turn it over to Christina.
Well, good evening, everyone. Welcome. My name is Christina Coach Garcia. I'm a realtor with Sampson Properties. I've been in the business for a little over 23 years, and I look forward to giving you a guideline on your home buying journey. Which will begin okay. So I've titled this Home Buying Made Easy, How to Purchase a Home, and I've broken this down into 7 simple steps. Okay, so the first would be agent orientation, finding a realtor, assessing your credit and finances, and getting a lender pre-approval, determining your needs, inventory preview and tour, make a purchase offer and negotiate to your contract acceptance and loan processing, and then walk through and closing, which I said keys, please. So electing an agent, it's very important. A realtor can equip you with lender program information. While you may have state and local programs available through multiple lenders, specific grants or offers may be lender specific, and grants that are actually free funds that you can use to purchase your home, or maybe it contribute to your closing costs and you don't have to pay them back. When you elect your agent, think about their experience and what you're looking for. Don't be afraid to ask questions. Consider their specialties and area of knowledge. For example, are you interested in a bank-owned home, a foreclosure? Are you interested in a condominium, a new home sale? Each one has their own specialty and niche, so don't be afraid to interview and question your agents to make sure you're a good fit. Consider how you feel. You need to be able to trust your agent, and then read online reviews or ask for references. Okay, so when you elect your agent, you sit down to discuss things, you should talk about timelines. If you're currently renting a property, your lease probably requests you to provide notice, maybe 30 to 60 days notice. So talk about a timeline when you're looking to move. Once you're out and you find a property, it's 21 to 30 days to close. If you're using a special program, maybe 45, so you'll need to sit down and be specific in your time frame. You'll want to review local disclosures, and if in order for you to go out and tour property, you need to have a signed buyer agency agreement. It is a legal requirement and is a legally binding contract. So make sure that you sit down and you review and you understand what it is you're signing. You should discuss compensation, expiration dates, and cancellation options. Okay, so once you've got your realtor, and you can elect your realtor first, or you could go through a lender first. First thing you want to do is evaluate your credit. Your credit will be a determining factor for your purchase. You can go to annualcreditreport.com and get a free copy of all 3 of your credit reports once a year. The credit reports are free, but not your credit scores. You can pay a nominal fee, or many of you might have a monitoring service that gives you a credit guideline, but the number that you see there will not be the exact number that your lender, a credit score number that is, that your lender will have. And Carly will explain that in more detail. If there are any discrepancies on your credit report, you can dispute them. Your credit will impact your interest rate and your mortgage insurance cost. You want to make sure you get a pre-approval letter that makes you a ready, willing, and able buyer. It defines a specific price point for inventory and purchase. Your letters are typically good for 90 days. And really, one very important point is that you cannot lock your interest rate until you're under contract. So when your lender gives you a pre-approval, it's a guideline based on today's rates. But until you actually get under contract, you won't be able to lock your interest rate. Okay, so I mean, buying a home is a very exciting process, it's a milestone for most people. So you want to sit down and think about what are your priorities? Are you more interested in location, space, price? Is proximity to work or public transportation a factor? If you have children, schools and location may be important. Do you want a property that's move-in ready? Are you open to older properties where you can redesign them? Are you interested only in new home builds or newer properties? And then another factor that's very important is monthly maintenance. So if you purchase a home with a homeowners association or in a condominium or a co-op, you have usually an additional monthly or quarterly fee that you'll have to pay in addition to your mortgage. So you want to make sure you're very clear on what you're purchasing and what your financial responsibilities will be. So once you've sat down and discussed these things with your realtor. You want to be proactive with your online search. If you have a good understanding with your agent will email you inventory options. You can use online access for inventory selection, preview inventory online and elect viable options. When you go on and you tour homes, you can take note of the interior major components like the heating and air conditioning system, the windows, the roof. Those are all things that will impact your monthly carrying costs, your utilities. If the roof and the other components are very old, it can impact your insurance rate. What are the community amenities and fees, and also your property taxes? When your lender gives you a pre-approval, they're going to put an estimate of taxes, but the taxes can vary from property to property. So you want to make sure that you're on point with your realtor. And most importantly, you need to be flexible. Sometimes what you're looking for and what's available are not the same thing, but you can find a good compromise. No, go ahead. Sorry, I've got people behind me. Next slide, please. Okay, so once you find a property that's of interest to you, you want to sit down and talk about making an offer. You want to discuss the offer price and recent comps or recent sales in the community. Determine what kind of conditions you might have, if any, on your offer. And by that, I mean, do you want to conduct a home inspection? If the property is older, would you like to do a lead-based paint testing? Radon. Okay, in Montgomery County, sellers are required to provide your radon test within the last year. An exception will be a condominium. So do you actually want to make your offer conditional on that, where you would pay, or just wait and have that from the seller? So these are all things to think about. If you're in a situation where you're competing with other offers, the more conditions you have on your offer, the less likely the owner may be to take it. Right now, though, the market is shifting. We're shifting from a seller's market to a buyer's market, so you may be able to negotiate in more detail. When you make your offer, I always put together a buyer estimate for my clients. It gives you a clear idea of what you're going to need to bring to the closing table. It's really important you know your bottom line. Maybe you want to negotiate a closing credit from the seller. Maybe you need a little bit of additional help. So it's a good idea for you to be on the same page from the beginning. Once you've gotten all of that and you've determined what your offer price will be, you will sign your offer and review the seller disclosures. There are certain mandated disclosures that the sellers have to provide. Some of them are county specific, some of them are state specific, and your agent will go over those with you beforehand. If you're not offering full price, you may accept, excuse me. Hold on one second, please. I apologize. If you're not offering response team to room 3204. If you are not offering full price, you may expect a counter offer. Let your agent negotiate on your behalf. You need to trust them and trust their instincts and their skills. And then once the offer is accepted, you have to have delivery. That means that you actually get a copy of everything that you've signed and you're obligated to. It's also important that you understand the terms of the contract and what your liabilities will be if you don't perform on the contract. What happens if you get the salary? So once you've got a ratified contract, you have loan processing and closing prep. Your agent will forward the contract to the loan officer and the title company. If you've negotiated any home inspections, you will schedule and attend an inspection. Your agent should be present for that. When you put together your offer, most homes are sold as is. When you make a home inspection contingency, you either have the right to negotiate or it's for informational purposes only, which means if you're not satisfied with the results of the inspection, you can just void the contract. So make sure you understand which you've negotiated for your particular offer. The loan officer will submit the contract for underwriting conditions. You'll consult with your loan officer for a rate lock. The appraisal will be ordered by the lender and a fee is collected upfront for that. The title company will perform the title history and review by a title attorney. So that just ensures that when you go to closing, there's no one else who can make legal claim to the property and then there are no outstanding liens or encumbrances on the title. And then as you're approaching closing, you'll get something called a CD, which is the closing disclosure that will come from your lender. And you'll get that 3 days before closing, and that will just confirm your interest rate, your terms, and your payment. So once your loan is approved and you've got a conditional approval and you're approaching closing, you'll schedule your walkthrough. Beforehand, you want to schedule utility transfer, address change with UPS. You can do that online. You'll want to confirm and wire or purchase a certified check for your closing funds. This is a really important detail. You cannot show up to closing with a personal check. And most title companies will require you to wire funds. So you will get a final number from your lender, and your agent will also be in touch with the title company. If you've negotiated any repairs for the property, you always go back to the property the day of closing. Some agents do it the day before. I like to do it the day of. And you'll go back and do a final walkthrough, make sure the property is in the same condition that it was the day that you negotiated your contract, verify any repairs. You'll go to the title company. Your alta is the closing statement. You'll present funds, sign your loan package, request copies of all documentation, exchange keys, and you're on your way. Thank you.
Thank you so much, Christina.
My pleasure. I'm as soon as I can figure out how to turn off my video, then I will.
Oh,
Okay.
you're good. So
Okay.
we don't currently have any questions in the Q&A box, but I do have a couple of things that I just wanted to touch on. So, what are some of the things when you have um, there are so many members in the state of
Mhm.
Maryland, so many members of the Association of Realtors, um, and there's so many to choose from that could be amazing fits. What are some of the ways that you would encourage the people here in this webinar to find those realtors that work for them?
Well, I mean, first of all, you could ask family and friends for referrals. You can do searches online. Maryland Home Ownership also has a list of realtors that may have certain accreditations for specific things that may be of interest to you. And asking your personal family or friends is tricky. Sometimes it's great. Sometimes your way of doing business may be different. You have other platforms like Google and Zillow where you can look at reviews, et cetera. And again, like I talked about at the beginning, you can interview your agent. So if you're not quite sure, you could sit down and ask, to have an appointment and really find out, what their field of expertise is, what their background is, um, if they have a lot of diversity that is in different kinds of purchases. For example, I mean, I worked in new home sales. I have a buyer accreditation, so I specialize in that, or maybe foreclosures, et cetera. So each situation is unique, and if you have an agent who's got a little bit of background in all of them, then it can only lend to your favor.
Wonderful. And as you said, what you're seeing a shift of going into a buyer's market. What are some of the things that you would um, tell a potential client that they could consider trying to negotiate for? What are some things that first time home buyers might want to keep in mind as they're starting to begin that search?
Sure. Okay. Well, for the last basically 5 to 7 years, we've been in seller's market, which means, and we've had a low inventory range. So you've had a lot of buyers competing for a small amount of inventory, which means that people were having to remove conditions, maybe not get home inspections. They were having to offer above list price in order to secure the deal. So now that you're having a little bit of a shift, not only do you have more inventory on the market, But the interest rates are softening just a little bit. So you may be able to negotiate price. Sellers are now having to readjust their expectations. Um, Putting together down payment and closing costs is always, not always, but often a challenge for people. So if you need a little bit of extra money to pay down your rate or just push you forward over the closing line, you can always have your agent try to negotiate a closing credit. So that's one thing that you can do. You can do both. You could reduce the price and offer a closing credit if something's been on the market for a while. So that's why it's also important if you have an agent who's tenacious, who's not afraid to negotiate on your behalf.
Wonderful. All right. Thank you so much, Christina.
Okay, thank
And
you.
Christina is
Appreciate
going to
it.
try to stick around. So if you have any other questions, please feel free to put them in the Q&A box below. And if Christina has to bounce out of this webinar before we're able to get some of those questions, I'm able to send them to her after the fact. So if you think of something you're like, I wish I had asked Christina this before she left, send them in and we'll get them to her after the fact. All right.
Okay,
Thank you
great.
so
Thank
much.
you.
And
Thank you
with
so
that,
much. Take care. Okay.
Carly, you have the floor.
All right. Hey everyone, I'm Carly Steiner with First Home Mortgage. I'm here in Baltimore, Maryland, and I'm very excited to be here with Maryland Realtors today to kind of just give an overview of the lending side of your home purchase. And Jackie is going to be a super help and help me with my slides. So this is titled First Time Home Buyer, but really can apply to any home buyer. So if you've purchased a home before, but it's been a while, this will be a great refresher. Okay, so about First Home, I'll keep this quick, but we've been around since 1990. We just celebrated our 35-year anniversary. We're one of the largest privately held lenders. We do a ton of mortgages, more purchase loans in the state of Maryland than any other private lender. We do all kinds of residential loans, whether it's your primary residence purchase, if you are looking to buy a vacation home, rental property, need an equity loan, we can help with all kinds of things like that. Next slide, please. And then this is just a little bit about me. I am local. I grew up in Perry Hall. I now live in Baltimore City. I have a background in customer service, elementary education, property management, and now real estate and financial lending. So all kinds of skills that have kind of helped me have a really well-rounded approach to helping people finance their home purchase. Especially the education piece. I take a lot of pride in making sure that my clients are, walked slowly through the process. I explain everything, and so that you know what your expectations will look like, so there are no surprises. I love to travel. Obviously working a lot, but like on my time off to see different countries, different cities. So just a little bit about me. So let's get into the fun stuff. So quickly, owning a home is the best and easiest way to grow wealth. People who own real estate versus rent have a significant amount more in their net worth. The more you pay down on your mortgage, the more you own of that property, and you can get different tax benefits, such as deductions for property taxes and any interest that you pay. Whereas when you're renting, that money isn't really going into anything that you own. Yes, it's keeping a roof over your head, and sometimes renting might be better for someone in a certain scenario, but it's not necessarily going to build you any wealth. So home ownership is definitely a great tool for that. And then this is a quick overview of the cost of waiting. We all know we've all wanted rates to come down a little bit for years now. While we will never see COVID rates again, I do think they'll come down a little bit, probably land somewhere in the fives in the next year or two. But a lot of people have been holding off on purchasing their home, last year and this year, just waiting for these rates to come down. And one thing to keep in mind, if you're not ready, you're not ready. But if you are ready and you're just waiting for rates to come down, it really isn't going to save much money, if any, to wait, because home prices and home values are always going to appreciate. Real estate is one of the only investments that's almost guaranteed to continue growing year over year. So while you're waiting for that rate to come down, the value of that house is going up. So if you look on the left side, the price of the home is $500,000. And the monthly payment, which is the monthly P&I on the third to last line, the $2,999, that's the monthly portion. If you look over on the right side, the home is now $637 5 years later, and the payment is $300 more almost. And if you look at the very bottom line, the total interest paid over the total 30 years, well, principal and interest, is almost $100,000 more. So buying, if you're ready, just do it. No one's ever said, everyone that says they regret not buying, it's because they, wanted to buy previously and they're missing out on these equity building opportunities. So getting started, the most important part of your home purchase is getting pre-qualified. You want to talk to a lender, speak with them about your credit, your income, your budget, what are your goals for the purchase. That'll kind of help give us an idea of what you might be able to afford. And then after that conversation will be the next step, which is an official pre-approval. So that'll be on the next slide. And the difference between a pre-approval and a pre-qualification, it's just a little more official. That means I have looked at your credit report, I've collected your pay stubs, I've looked at your tax returns, I've collected your bank statements to see that you have, enough money to cover your down payment and closing costs. And once that happens, you get what's called a pre-approval letter. And when you make your offer on a home, you need that letter. The seller of the home is not going to accept an offer if they don't know you've been pre-approved. They want to make sure if we're picking your offer, you can actually get the loan to purchase the house. So the three main pillars, I guess you would say, that we look at as lenders to determine, can you qualify for a mortgage? What kind of mortgage? How much? The three main things are going to be credit, debt to income ratio, and funds for down payment and closing costs. So credit is kind of the first step. There are minimum credit scores needed for a loan approval. So we want to see, where you are with that to see, are we good to proceed? Do we need to work on anything? I am never one to say, sorry, your credit's too low, I can't help you. I am happy to help guide you on some things that can help with your credit. If it's more in depth and you've got like older, derogatory type accounts, we've got plenty of credit partners that we can refer you to help you clean up the credit and get your scores a little stronger. I won't go too far into this, but this just kind of talks about what makes up your score. The biggest thing is paying on time. Even one late payment can hurt your scores, and that late payment is going to hang around on your credit report for years. Even if you were, the bill was $20, it doesn't matter if it was $20 or $500. The late payments are painful. So even if you can only do the minimum, always try to make your payments on time. The balances are pretty big too. You'll notice if you are someone who checks your credit regularly that month over month, the scores might fluctuate. And that's usually due to credit card balances. So the credit bureaus really like to see your balances at 10% or less than the limit on your credit card. So if you have a $2,000 limit, they want to see that you're only spending around $200. That shows that you can have this credit, but use it responsibly. They only see your balance the day that your credit card reports that balance, and that's only once a month. So, and that's usually when your statement comes out. So if you max out your credit card, but you pay it off before the statement comes out, then that shouldn't affect your score negatively. But if you leave the whole balance there and they see that it's maxed out that month, your score might be a little bit lower. If you have any more specific credit questions, Jackie's going to provide my information. I'm happy to go through that with you guys. All right, so next, we know if your credit is good and we can proceed. Now we need to know how much house can you afford. So we're going to look at your income that you're currently making, and depending on the type of income, we may need either two paychecks, or if your pay varies and fluctuates, we could use up to like a 2-year average, depending on how much it varies. This really serves to tell us, how much of a mortgage can we give you to keep you in a comfortable place where you'll be able to, make your payments comfortably and still live your life. The guideline on how much we recommend for your mortgage to be compared to your income is 28 to 31% of your gross monthly income. So, and that includes your whole mortgage payment's going to have your property taxes and homeowners insurance included. So that lump payment we say should be around 31% or less. And that leaves room for your other expenses, like a car payment, if you have student loans, credit cards, things like that. There are some flexibilities with that percentage. If your credit is good, sometimes we can take that percentage a little bit higher. So it really just depends on your overall financial picture. And then assets, we are going to ask to verify any assets that you're using for your purchase. So for your down payment, like I said earlier, we're going to want to see your bank statements to see how much you have in there. And due to some of the craziness that happened back in the early 2000s, we are very particular about the money that's being used for your purchase. So if we get 2 months of your bank statements and it shows that you've had $20,000 in there for the last 2 months, great. But if we see any large deposits, so say your October statement showed 5,000 and now your November statement shows 20, we obviously can see the payroll deposits. That's fine, of course. But if there's a large cash deposit of $15,000 at the ATM, we need to know where that money came from to make sure it's legitimate money that is yours, that can be used, not a loan or some other money from somewhere else. But everything has to be sourced. If you get a gift from family, we'll have to document that a certain way. So just the best tip if you're planning to purchase a home is try to keep your bank accounts as clean as possible. If there's a lot of like Zelle or Venmo payments, either incoming or going out, that can raise questions from the underwriter. Or some of those like installment accounts you can do now if you're trying to buy something online and it says, oh, you can pay $200 or 8 installments of $50. And we see that repeatedly on your bank statements every month. We now have to add that in as part of your debt ratio. So the cleaner your bank statements, the easier your process will be. And then the documents that we are going to review for your pre-approval are going to be your past 2 years of tax returns, your past 2 years of W-2s or 1099s if you're self-employed, if you have an S corporation, K-1s, 30 days of pay stubs, 60 days of bank statements, and your photo ID. And the reason that we need pay stubs and W-2s and tax returns is every document is going to show me something different. So your W-2 is going to show one lump number. That's the total amount you made from that job that year. But your pay stub is going to break it all out. So maybe you are an hourly employee, but you have the opportunity to get bonus, commission. There's different ways that we calculate each different type of income, and I need to be able to see how much was regular pay, how much was commission. So the pay stub will break that out for us. And then the tax returns, we look at to make sure all the income matches up, and also to make sure that you don't owe taxes for prior years, especially for government loans such as FHA or VA. The government is not going to insure a mortgage for you if you already owe them money for something else. If you're in a payment plan or something like that, that's fine. But if there's outstanding taxes due, then we'll have to get that taken care of. All right. And then the debt ratio that I mentioned previously, we like to see it somewhere around like 30%, 30 to 36. And that is a calculation that we do. Say you make $5,000 a month. If the debt limit is 36%, then that's going to give us a limit for your mortgage somewhere. Let me get my calculator for that. 36% is kind of a weird number. But that would say $1,800 would be an ideal monthly payment for you. Again, there are some flexibility there depending on your credit score and the other factors. And we'll also look at the other debts that you have to make sure that that total debt number does not go too high compared to your income. Some different programs have different debt limits, so that once we determine what kind of loan you qualify for, we can figure out exactly where that limit needs to be. Budgeting is huge when you're saving for a home. Obviously, we know how much your mortgage payment's going to be once we get that figured out. But we want to make sure that with the home purchase, you have some other kind of budgeting thought that you've thought about because you own this home now. I've had a few different circumstances where, we close on the purchase and a month later someone calls me and they say, "Hey, Carly, the AC is not working. Who do I call? Or what should we tell the seller?" I'm like, this is your house now. So you've got to, get it fixed. So you definitely want to make sure you have a slush fund of savings in case something breaks. Of course, a lot of times when people buy a new house, you want to get new furniture. So just having some extra savings is very important. Some loan types will actually require that you have a certain amount of savings left over afterwards, and we'll verify that by looking at your bank statements or, retirement statements, things like that. And so there's plenty of tips on saving. If you need any tips, again, let me know. I can send you over a list. But sometimes if you really want to own a home, you'll have to make some adjustments to your budget. Maybe you don't go to Starbucks as much, or maybe you don't go out to eat as much. So definitely an important piece in the preparation of your home purchase. All right, and then what is a down payment? The down payment is the percentage of the sales price that you as the buyer are contributing. The higher down payment you have, the more serious you look to the seller and the better terms you're going to get on your loan. All the terms of the loan that you're getting are based on the risk. What risk are we taking by lending you this money? So the higher down payment you have, the better terms that you'll get. If you don't have a large down payment, don't worry. There are plenty of different down payment assistance out there, programs out there that can help cover some or all of those costs to kind of keep it a little more comfortable. Closing costs are a separate expense for your home purchase. So let's say the home is $200,000 and your down payment is 3%. That's the minimum for conventional loans for first-time buyers. So that's $6,000 for the down payment. You'll need more than $6,000 for the purchase because there are also closing costs. That's going to include lender fees that any lender will have for underwriting and processing, your appraisal, the title company is going to have fees, escrows and prepaid. That's for your homeowner's insurance and property taxes. There are several months we need to collect up front to make sure your escrow account is set up for the future bills that are coming. And so there's a couple other fees that could be lumped in there, but it's definitely important to budget for that. While we can get additional assistance for that in some cases, and sometimes the seller will help with closing costs, those aren't things that are guaranteed. So the more you can save, the better. All right, lender fees. So that's again what we charge for origination, underwriting, processing. Ours are pretty competitive, and we do waive all of our fees for our heroes. So teachers, medical, healthcare professionals, first responders, veterans, all of those types of employees will waive your lender fees. And then third-party fees will be costs that you need for the appraisal, your title, insurance. There aren't really attorney fees in Maryland, but the title companies will charge home inspection and then transfer taxes and things like that. And then on the next slide, there are the prepaid fees, and the prepaids are not really fees. It's just homeowners insurance and property taxes that are going to be due that need to be paid upfront. So we pay them ahead of time. All right, and then we can probably skip a couple of these, Jackie. I think this was on my longer version. But I'll quickly go over down payment assistance. That's just different programs that you can get to help cover some of those costs, the down payment and closing costs. There are grants out there. There are deferred loans. There are lender credits. So once we have a good idea of your full financial picture, we can figure out what you qualify for and which of these programs we can use to help keep your costs as low as possible. And we can skip that one. There's like the next like 4 we can probably skip. All right, real quick, we'll go through the process of buying a home. So of course, you get your pre-qualification first to figure out how much you can afford, because no one wants to go out looking at homes and then realize you can't afford it, or maybe you can, but the payment's going to be super high. So getting your pre-qualification and knowing your budget is very important before going out with your realtor. Then you will, you can, if you don't have a realtor yet, once you talk to me, I can make plenty of recommendations on great realtors in the area who I've worked with. If you have one already, great. They'll help you find the home. You'll make your offer. The realtor will help negotiate the different terms. You'll get your inspection. You'll get your appraisal. And then you'll go to closing. So that's kind of just a brief overview. And of course, we can go into it in more detail if you'd like. These are just a couple don'ts to don't do these things while you're purchasing your home. As I mentioned, try to keep your bank accounts as clean as possible. So moving money around from account to account, that's just going to create more paperwork we have to collect from you. Same with large deposits. If you're selling something large and you need the money, make sure you get a receipt of sale or a bill of sale so we can prove where the money's coming from. Save everything, W-2s, pay stubs, everything's electronic these days, so you don't need like paper pay stubs, but try to keep everything somewhere that's easy to access because we'll need it. Don't open any new credit. Don't take out any new loans. Be aware of your credit and what's on that report because, obviously it's going to come up. And if you can avoid changing jobs, please avoid it. We do have people that have to change jobs, and usually it's okay as long as the pay is staying similar, but, easier if you don't do that. All right, and that's it.
Wonderful. Thank you so much, Carly. And I do see that we have some questions starting to filter in. What is, it says every now and then a large deposit may be needed. Can we explain if that's the case so that it won't appear to be sabotage?
So it really just depends. Like I said, every dollar that you're using for this purchase, we have to source. So if it's a tax refund for $4,000, your bank account's going to say IRS tax refund. We can clearly see where that's from. If it's a shoebox full of cash that you've been saving your whole life, my best piece of advice is just put it in the bank now. Because what we need for your pre-approval is 2 months of bank statements. So if you put it in there now and you're purchasing something, in the new year, by the time we get those 2 statements, we won't see that deposit anymore. If there are other specific circumstances, feel free to reach out to me and we can figure out the best course of action.
Awesome. And also one of the things that I was wondering if you could speak a little bit more about, Carly, is can you talk a little bit more about a buyer's option to buy down their rate
Yeah,
with
absolutely.
interest rates?
Yeah, so their interest rates are, they've been quite the hot topic over the last several years. Everyone, depending on your credit score and the amount of your down payment, is going to qualify for a certain interest rate. But that doesn't mean that that's the only rate available. When I look up the rates for your particular application, I get a whole sheet, a whole list of rates. And the one in the middle is the rate that you qualify for. That's what we call par. So there's no cost for that rate. You're not getting any credit for that rate. That's just your rate. So let's just say 6.5. If you are like, the payment's a little bit higher than I would like it, I would really like to bring that payment down, you can purchase prepaid interest to permanently reduce your interest rate by purchasing discount points. So discount points are charged based on a percentage of your loan. So 1 point would be 1% of your loan. And that will it doesn't reduce your rate by 1%. That's just the cost of it. It will reduce your rate anywhere from 0.25% to maybe 0.75%. It really just depends on the market that day. Interest rates are set by the bond market. So just kind of depends on which rate's doing well that day in the market and how much that rate costs. But you can purchase, and you can do 0.25 point or 0.5 point that can get the rate down a little bit lower. So there's lots of different options. Or if you're really comfortable with the payment at the 6.5% rate, but you need some money for closing, we can give you a higher rate and then we'll give you a credit, which is the opposite of discount points. So lots
Awesome.
of options.
Thank you so much. I don't see any of the questions in. But again, if you guys have questions that you would like to ask Carly, feel free to send them in and we'll have a larger Q&A at the end. But with that, thank you, Carly, and I'll pass it over to Jim.
Thank you.
Okay, well, thank you, Jackie, and hello, everyone. I'm Jim Hall. I'm a Senior Affordable Lending Manager with Freddie Mac. Now, Freddie Mac is a mortgage company, but we're not in competition with First Home, and we're not in competition with the Maryland Mortgage Program. And we operate in the secondary mortgage market, and what that means is we create mortgage programs for companies like First Home and the Maryland Mortgage Program to use. And then they sell those loans to us, and then we put them into investments out in the investment market. So, but I'm not here to talk about mortgage programs because Carly just did a great job, and Catherine and Frank will be talking about their mortgage programs. And both companies are great partners of Freddie Mac. But I want to talk about education. And I really commend Maryland Realtors for, putting on this monthly webinar to educate the citizens in Maryland, on the home buying process and the mortgage application process. So education is a major pillar here at Freddie Mac. And we developed a financial literacy program called Credit Smart. It's been around for over 20 years. And this is a free tool for you to utilize that will help you, with guidance through the home buying process and the mortgage process. So what it will do will allow you to have, a better dialogue with your realtor and your loan originators, through the process. So again, it's a free tool. Jackie will be providing these slides to you after the presentation. So the web address is on this first slide here. And if you want to, take a look at it after this webinar, you can always Google Freddie Mac Credit Smart and you'll be able to get to the web page. So, we did a major overhaul to Credit Smart within the last 2 years to make it more web friendly. You'll find it very interactive. And it's also, multilingual, so it's available in English and Spanish. So with that, we broke it into two sides. And the sides that you really want to focus on are the financial capability side, which is the essential side, and then also the home buyer education side, which is Home Buyer U. We also, personalized it for you. So you can set up your own dashboard, which will allow you to track your progress as you go through the modules. You can earn badges. There's a SMART score on there. You can set goals, and you can also keep your own notebook. So it's very interactive. It has pause and resume functionality. So it's not something that you have to sit down and plow through it all in one sitting. So it's very convenient for you to utilize. So the essential side is really to help you through your whole home ownership journey. And as you can see on the screen here, these are the subject matters that we cover. You go through setting goals, earning and then spending, being a savvy borrower, planning to save, and preparing and protect. So, it's very important for you to set your goals as a homeowner, especially from a financial standpoint. And you want to track what you earn versus what you spend, because you want to have money left over each month to live on. You don't want to be, house poor and just, all your money going towards a mortgage payment. Also, you want to understand credit, the importance of maintaining your credit score, not carrying a lot of debt, understand how to eliminate it and how to borrow smartly. And also, you want to learn how to save. It's very, very important to have what my father used to call a rainy day fund. And, my wife and I, we bought our first house back in 1990. And I can remember my dad telling me, Jim, you need a rainy day fund. And I was like, well, what is that, Dad? He goes, well, you're going to be a homeowner now. and things happen, things out of the ordinary and emergency type items where you might need quick cash. And you don't always want to be relying on your credit cards. And, I don't know if he was a prophet or what, but in 2 years into our home ownership journey, we came home after work one night and our water heater flooded our basement. And our basement was, uh, with, semi-complete, semi-furnished, and it had, the rug was ruined, and, we had all kinds of water damage. And, but I did have money. I listened to Dad, and we were able to take care of it real quick while I put in my claim for the home ownership policy. So with that, these are just words of wisdom. And, we want you to make sure that you really understand what you're getting into. And that's goes into the prepare and protect perspective here. Because this is probably going to be the biggest financial decision you're going to make in your lives. And it's really exciting when you're buying that house and getting that mortgage approved and closed. But that's just the beginning of your home ownership journey. We want you to understand the importance of making that monthly mortgage payment. And by doing that, you're going to be gaining equity and wealth in your property. So that's important to know, that this is an asset. It's just not a dwelling. And that's what Credit Smart will help you better understand. Now, the homebuyer U side, that is for the immediate process. And this is only 6 modules. It shouldn't take you more than 2 to 3 hours to complete. And, through these 6 modules, you'll learn the basics on home buying and also the mortgage application process. So once you complete these 6 modules, you have to pass a test. You have to achieve 80% or higher, but you get a completion certificate and a diploma, which meets national industry standards for home ownership education and counseling. It's good for 12 months. And if I'm your loan originator and I get notified that, you put the time in and you pass this test, I know it's my job to get your application approved and get, the mortgage closed so you can get into that house. So again, Credit Smart is free for you. So this is a bonus for you by, attending Maryland Realtors webinar tonight. You get to walk away with something that's very valuable. It didn't cost you anything, and you put the time into it, and you'll be a better homeowner because of it. So again, Jackie will be sending these slides out to you. I'm going to cut it short here because I know Catherine has a lot of great information to go over, and we're getting close to time here with 12 minutes left. But are there any questions, Jackie, in there, or can I pass it to
I don't have any for
Catherine?
you, and like you said, we're running a bit behind. So, Catherine, I think if you want to take it away.
All right.
Okay,
Thank you.
Thank you, Jim.
let me get in here. All right. Yes, it is running short, and you saved the best for last. So let me pull up my website. My name is Catherine Kramer Dale. I'm with the State of Maryland Department of Housing and Community Development. And the State of Maryland, along with other states, offer down payment and closing cost assistance that help you with purchasing your home. The State of Maryland, it's not a grant. I want to make sure that everyone understands that. We have programs that will provide you significant amount of money to help you with your down payment and closing cost. We don't charge you any interest on that. You don't have to make any monthly payments on that. But when you sell or refinance your house, you of course pay back your first mortgage, and you have to pay back the State of Maryland Department of Housing for the down payment and closing cost assistance that we've helped you with. Now, on our website, which is public, it's www.mmp.maryland.gov, we have interest rates. And like Carly mentioned, everyone is very, very aware of how the rates are going, and everyone wants it to go down. So with the Maryland Mortgage Program,
You cannot be on a deed or have any interest in any property anywhere in the world at the time of this closing. When you're going through one of our lenders, which by the way, I will make a very, very important point. Carly is with First Home Mortgage. First Home Mortgage is the top lender for the Maryland Mortgage Program, and I've been here 17 years. So they've been on top ever since I've gotten here. So you've got a fantastic lender to use as a resource. Carly's going to ask you a series of questions. And one of the questions is she's going to ask you is, do you own anything anywhere in the world at the time of this closing? Because you'd have to sell it. Because when you're buying a home and using the Maryland Mortgage Program, it has to be for the purpose of your primary residence. As long as you have a loan with the Maryland Mortgage Program, you have to use it as your primary. If you decided that you wanted to keep it and flip it as a rental, you have to pay back the entire first mortgage and the second mortgage, which is our down payment money. Now, you don't necessarily have to be a first-time home buyer. The program is definitely designed to help everyone achieve the dream of owning their own home in the state of Maryland, but you don't have to be a first-time home buyer. Let's say you haven't been on a deed for the last 3 years. So let's say you were on a property, you were married, maybe you got divorced and you went and moved back home, or you were renting for the last 3 years, and now you've decided that you want to re-enter the market. We consider you a first-time home buyer. We have this thing on our website that the lenders are very familiar with. It's called a mapper. And they put in the property address that you're interested in purchasing. And if your property is in a targeted area, you are magically considered a first-time home buyer. And again, still can't own anything anywhere else in the world. Or for those of you that are veterans, if you are using your VA exemption, it's a VA certificate that you have as a first-time home buyer, we have a form, it's called a VA exemption form, and we will consider you a first-time home buyer. You don't have to be doing a VA loan. You could do FHA, VA, USDA, or conventional, but we have those three opportunities. Never owned, haven't owned in the last 3 years, purchasing in a targeted area, which shows up on our mapper, or being a veteran and using your VA entitlement. So you could use products as a first-time home buyer, or if you're not a first-time home buyer. These are the rates that are on our rate sheet. So this product right here, let's say Carly and the real estate agent were able to negotiate the seller to contribute some additional seller help. And you had money that you had saved. And maybe you are getting a gift from a family member and you don't need any money from the state of Maryland. This is the lowest rate there out on the street. This is a product where you qualify for the Maryland Mortgage Program, but maybe you don't need any money from us, so you don't have to worry about paying us back. And you get the lowest rate that's out there currently. But most clients that are coming from our lenders are coming to us because they do need assistance. So the state of Maryland Department of Housing, the Maryland Mortgage Program, offers down payment assistance. You could get $6,000 that you could use for down payment and or closing cost. And again, remember, you have to pay it back when you sell or refi. Or you could get 3%, 4%, 5%, and even there's a program that gives you 6% of your total first mortgage round down, no change. The 5% product right now is winner, winner, chicken dinner. The lenders are using this 5% product as the most popular down payment assistance. Think about it, that's 5% of the total first mortgage round down, no change. That's a significant amount of money that the state of Maryland is allowing you to borrow at no interest. You don't have to make any payments on it, but you have to promise to pay it back when you sell or refi. And then we have some specialty products. So if you were buying in Montgomery County, Maryland, and you are an employee of a Montgomery County agency, we have a program where we give you $25,000 to help you with your down payment and closing costs. That's a significant amount of money. Then we just have a regular Montgomery County program where you're just buying in Montgomery County. You don't have to work in Montgomery County. You don't have to be an employee of a Montgomery County agency. And the down payment assistance, the DPA, is up to 40% of your borrower's qualifying income, up to a maximum of 25. The last product, which is amazing, is the state of Maryland will help you purchase a home, even give you down payment and closing cost assistance, and help you pay off your student loan debt. So, like Carly was mentioning, the DTI, it will help take away that debt of your student loan debt, which is generally a very huge obstacle for first-time home buyers because the student loan debt is a significant payment that they're required to pay. So, if you are interested in purchasing a home, you've got a fantastic lender on this call. And as Carly mentioned, you can certainly use the agent that is presented here today, or your lender can also refer you to an agent. You need to get pre-qualified. You need to connect with one of our approved lenders, which Carly at First Home is the top lender, First Home Mortgage. They will take all your information and pre-qualify you so you know how much a house you can afford or that you feel comfortable with making that monthly payment on. And then you say to Carly, "Oh man, I did save some money, but like Carly and Jim were saying, you don't want to be house poor because something's going to happen. When I bought my house, I was like, "Oh my God, I got to buy all the blinds." You can't even imagine how expensive blinds are. But then God forbid if something happened like Jim said, where you're not in the house that long and then all of a sudden your water heater goes up. So, if you need money from the state of Maryland and you qualify for the program, the lender will determine that you qualify and they will pick a product on our rate sheet that is designed specifically for your needs. Don't forget the state of Maryland Department of Housing and Community Development. I've been here for 17, going on 18 years. It's an amazing product. It helps people with down payment and closing cost assistance, which is that's just the huge obstacle. People have good credit, people have money saved, but they're like, oh my gosh, I've been paying rent, so I know I have the ability to pay the mortgage payment because I've been paying it in rent, but I don't really have that much money saved, or I really don't have any money saved. I can't purchase a home. Think of the Maryland Mortgage Program. It helps you with your down payment and closing cost assistance. My name is Catherine Kramer Dale. I'm with the State of Maryland Department of Housing. Please visit our website. Please connect with Carly from First Home Mortgage and take the opportunity. The new year is coming. Claim it. Claim it and be a homeowner if that is something that you desire. Thank you so much for your time. Congratulations on your journey with purchasing your home. And if you have any questions, I'm right here.
Well, I am not currently seeing any questions.
Okay.
So, because we are almost at time, we're going to go ahead and close up. But if you have any questions after the fact, please do not hesitate to reach out to us at webinar@mdrealtor.org. And thank you so much for your attendance. As a reminder, our next Your Home Buying Keys webinar is on December 18th from 6:30 to 7:30. Please share that date with anyone you think would benefit and other soon-to-be home buyers in Maryland. We would love any feedback you have about this webinar, so I'm going to send real quick in the chat a link to a short Google form. Any input you can give us would help us improve this webinar for future homeowners. Be sure to check out marylandhomeownership.com for more resources and information on homeownership. We wish you all the success in your journey. Thank you all so much. Have a wonderful evening.
Bye.
Good night, everyone.